Could boring investments be better? So what we mean by that is nice steady growth better than chasing the next wave or the next big thing? Why exciting and good investing rarely mix? And this has been tried and tested over the years. Investors like Warren Buffett would tell you that steady growth outperforms the next best thing. So if you look at history and look at what markets have done, steady growth is the winner. The allure of the exciting investments, and if you look at headlines at the minute, I mean, at the minute, gold is taking over the world. Silver, by all accounts, well, not by all accounts, actually, over the last 6 months, silver has done phenomenally well. But if you're chasing the next exciting thing, where does that lead? And headlines will focus on the exciting, but it also can push you more towards emotional investing, which can also take on excessive risk. And in there lies the challenge. Analogy: investing is like a garden. It's like gardening. You can have all these exotic, sexy plants, or you can just put in your perennials that'll grow every year, year on year on year. I know it's a kind of a strange analogy, but guys, it's the truth. You can have nice, fancy everything in your garden that'll die off every year, or just put in your perennials that'll come. Investing's exactly the same. Why simplicity often wins? The more complicated an investment is, generally, the higher the fees. And generally, complexity means that people find it difficult to understand. And simpler investments are easier to understand for all of us, and advisors included, and generally carry lower costs. And costs are a huge thing when it comes to investing. Yes, it's good to get the good returns, but if you're on high fees, well, the fees eat up the returns. Staying investors investing matters more than timing. So time in the market rather than timing the market will generally give you a better result. And it's also easier on the head as well. Missing a handful of strong investment days in your investment journey means a huge lot. And what we mean by that, when markets are a little bit volatile and the markets fall, well, the next time it rises, if you're not in there, then you miss the bounce. And missing the bounce means an awful lot. It does hit your investments very hard. So you stay in, get in a good investment, and stay in investment, guys. Does boring mean underperformance? Simple diversified funds have delivered competitive returns over time. They tend to reduce volatility, and for most people, not losing is as nearly as important as how much they gain. And volatility is what we're all trying to avoid. And a well diversified portfolio or an investment gives you that little bit of volatility protection, especially on the downside. And slightly lower, steadier growth will always, it's still meaningful growth, guys. And investing is a journey, it's not a get rich quick. And if somebody's offering you a get rich quick, if that's what you're looking for, take it. But it could also get poor quick. And that's the problem. Patience beats excitement. Good investment is rarely thrilling. And we've all seen that .com back in the early the early 2000s. We've seen it with Bitcoin. We see it now with gold. Everything has its spotlight, and the idea is if you're chasing that all the time, you are going to falter and you will lose money. The journey will never be always up. Consistent discipline, stay the course is the way to invest, guys. Slow, steady, boring doesn't mean broken. Time does do all the heavy lifting. Small increases every year is what will actually create wealth for you. Stay diversified, get a good low cost investment, and stick with it, guys. That's the secret. If you would like more information about investing and how to set it up correctly, by all means get in touch and follow us.